Hello guys, Dividend Enjoyer here, and today I'm going to be doing a stock analysis video of my $37,546 portfolio. Currently up $394 today, or 1.05%. Pretty good day. Total gain loss though, 307.14, so it was actually negative yesterday. Obviously, I was a lot higher from my last video, but I'm going to talk about that. I trimmed a little bit of Amazon to buy more waste management and Vici. It's pretty much the only reason. But overall, account's still in the green, doing good. Got some good realized gains. Got some higher dividend stocks that I feel like are more stable, and I really feel like waste management is a better buy per dollar than Amazon right now. I think it's very safe and reliable. I think that you have the potential for higher ups with Amazon, but I really think that waste management's good here. Moving on to the first stock in my portfolio, though, and my lowest position, it is Prologis, ticker symbol PLD, which actually did quite well today, up $60.52 today, or $163.91 total, or whopping 3.46%. So this was the highest percent gainer. I kind of expect that with interest rate cuts potentially being on the table here in September, up 9.96% overall. And this stock pays me $63.67. Haven't really added, haven't sold any. Just kind of collect the dividends on this one, let it sit. And it's doing pretty good, actually, from when I averaged into it. I mean, I've had no emotions about this stock. I've only bought it when I thought it was really cheap relative to my personal valuation for what I thought the stock should be worth. And I've done pretty good so far. But again, not really selling, not really buying, kind of just basically looking at it as like a stock that just pays me $63 a year to hold it. And I just continue to hold it because I would hold it without the dividend. I think it's a very good company. It's obviously a warehouse logistics REIT. I've talked about that. They own a lot of warehouse space. And I think that the stock is going to do very well in the future because I think that warehouse space is going to be just more valuable in the future as we move forward. And if we develop autonomous systems as well, that could create a lot of wealth. And I think Prologis could be there with the space, which is going to become, again, more valuable. Even warehouse space is going to become more valuable. I think having space that you can rent out going on into the future is going to be extremely valuable as a business. Next up, we have Texas Roadhouse, ticker symbol TXRH. I'm kind of treating this the same as Prologis. I have my initial amount I've bought. I've made peace with this, about 2,400. I believe that they're going to continue to be able to open new restaurants into the future, and that's going to drive the value upwards. I think that there's a lot of momentum here, and I think that they have the ability to really exceed expectations going forward. And even if they have a bad next 2 years, I'm holding this for the long term. Very happy with my investment. Going to continue holding it. And I really like this stock. I think that Texas Roadhouse is one of those sit-down chain restaurant stocks that has a lot of room to grow. I think that it's reasonable to expect that they're going to be able to continue to make new stores where it makes sense to make new stores and have new franchisees open stores. And that's all going to flow into corporate's pocket, and they're going to get bigger and bigger as an entity. Or there's always a chance that they could get bought out by someone else too, and that would be cool as well. But I really like Texas Roadhouse as a business. I think it's a very strong company, and I'm a very happy investor in it. I know that I'm down 9.32% on it, second lowest investment in the portfolio. But I really like this stock. I think that this stock has a lot of room to run. I don't necessarily think I will buy any more just because I don't want to own any more restaurant stocks just in general. It's just not my area of expertise, honestly. I think that there's too many things that can make it difficult to own a restaurant. It's hard to be competitive. I just saw the growth here, and I thought it was for a good price. We'll see if it was a mistake or not. I still got a lot of time to ride this out, but I really do believe that over time they're going to be able to really continue to open more stores into the future. And I think that that's going to dictate their success, is how many stores they have, how efficient they are, and really just being able to grow that cash flow is what's important to me as a Texas Roadhouse investor. And I think if you're willing to sit back and really wait a while, I think that Texas Roadhouse is going to really perform quite well and really help you to make a lot more money going forward if you're a long-term investor. Next up is Apple, ticker symbol AAPL. This is been performing very well, as has the rest of tech, which is why I was really stressing that I thought it was a very good time to buy tech. Now, I don't think it's as good of a time to buy tech, but I do think that the future is going to continue to look better and better for tech. Apple obviously had their iPhones that people didn't like. I had sold off 2 shares at 237. I didn't even think about the Apple event, but that's usually what happens. Is Apple does usually crash during their event where they unveil the new iPhone for whatever reason. Um, but I really like the stock. I think that the stock has legs. I think that there's a lot of value here. There's a lot of quality here, but it's very hard to get a good price on it. That's why I was saying 210 or below. That was my target to buy, and I've just been slowly selling off over time. I'd like to just really hold this though. I think that Apple could do very well into the future, but I do think that it is 230 now instead of 200 when I was buying, and that is a pretty good gain, 13.84%. That's incredible, even if you get that in 1 year. So it is very tempting to realize that, especially when waste management is sitting where it's sitting. I think that waste management is really incredibly low. And I think it makes sense to lock in a lot of value on waste management here. But I also think that I got in for a very cheap price on Apple, and I think it'd be a shame to pay the taxes on that. I think it's going to retain this value very well. I think this is a very fair price for Apple, honestly, 230 a share. Um, I don't think you're getting it on sale, but I also think that with recent developments and with the amount of risk that's kind of taken out of the equation, the idea that they're going to perform very well in terms of being able to integrate AI into their systems and into the Apple ecosystem, I think that you're actually getting not a very bad price on Apple, honestly. There's going to always be a premium for it, but it's an amazing company. And if you're a long term investor, you have to really have faith in Apple. If you believe that people are going to continue to use the smartphone and continue to stay in the ecosystem, which it doesn't look like there's any major real competition to me in that sector, I think that you can continue to safely be an Apple investor. And I think that you should continue to be an Apple investor. Not that that's financial advice, but from my personal experience, I've sold very little, but I have trimmed a little bit just because I don't want it to drop again and then not be able to lock in any profits, especially when waste management was as low or is as low as it is. I mean, I was getting it at 218 when I was buying it. But I really think that waste management should be more in the 230s for a fair price. That's my personal opinion on it. Um, and I'm going to act accordingly. That's going to be the main thing I'm going to buy. And I'm going to trim this tech that I've already done very well with and, buy more of the trash company that's not going to really move and is slowly, incrementally going to give me gains. But that's kind of my thought process on it. With Apple, I really like it. I really like being able to just hold it. But obviously, yes, I have been trimming a little bit of Apple, a little bit of Amazon. Also trimmed. I haven't trimmed any Amex, which is the next thing I'm going to talk about because it is now officially up the highest as a percentage of my portfolio, although the highest percentage gain I ever had, I believe, was the 44% from Meta. But American Express is up 16.89%, nevertheless, from where I bought. Again, very happy with it. Very happy with all my companies. I've got about 10 shares or about 3,300 worth, and I'm up 476 on it. I really think that payment processors are good, and I was actually thinking about it earlier. I kind of think I might want to add like a Visa. I might want to add like a Visa or a MasterCard to my portfolio, maybe an Intuit, maybe a JP Morgan Chase. I think we're going to get something with a financial theme headed into the portfolio at some point. I've also thought about Uber and Take-Two. I do believe that Take-Two is going to be big. I think that GTA 6 is going to be a blockbuster. I think that it's really going to exceed expectations, and I think it's worth making a big bet on Rockstar. I don't necessarily love 2K and all the other franchises within Take-Two, which makes it kind of problematic for me to want to add it. But I'm leaning more towards financial stocks as well, just because of their safety. But that's another one I'm considering as well, is Uber and Take-Two, along with some of the financial stocks. But I really think that you should have like a Visa, MasterCard, or Amex in your portfolio because I think that those three stocks really perform very well. And there's always going to be transactions money-wise that are happening there. I already have some Amex, so I'm actually thinking that Visa might be the higher quality name because you're kind of avoiding more of that risk. But I also think Intuit could be a very good company to buy into as well. I think that their business model is very good. I also really like Moody's. I think that that's a company that I could add to the portfolio as well. I think that'd be a really cool one to add. Um, I don't know. I think there's a lot of companies that I could be looking at, and I think I'm going to be doing a little bit more stock analysis videos to look for those companies because that's when I'm actually motivated to look for stock analysis videos is when they're for my portfolio. But kind of got derailed there. Sorry about that. In concerns to Amex, I think that Amex is very strong. I think that the rich consumer is still strong, still spending a lot, but wouldn't add any more, wouldn't sell any here. Probably won't sell any ever. I think it's just going to continue to grow in my portfolio and be the type of business that's just amazing for years and years to come. Amazon, kind of the same deal, but I have been trimming a little bit of it. Not at this price. I think I'd trim this. No, this is the one I trimmed, I think, at 237 because it's been just dropping the last couple of days. I was able to get a little bit out, but again, I don't think I'm going to sell any more until 247, which is the 52-week high, I believe. And I talked about that at length. I had made actually, I think, one of my portfolio videos saying that at 200, it was probably a steal, even though it had just kept dipping and dipping and dipping. That's where I bought a lot of my Amazon, and it kind of does show again up $492.85, or still 16.67%, and it's down overall in the last couple of months. So in the last week, I feel like it's really just nosedived. But I'm still a happy owner of Amazon. I think that Amazon's the future. I think that AWS is going to be extremely valuable going into the future. I think that Amazon is positioned to take a lot of market share from retailers and just continue to, again, all of their projects end up just funneling into greater growth for the company. And Amazon is able to essentially take some of the money that's there, and instead of giving it to the shareholders in a dividend, they're able to stretch it out more with different projects or different acquisitions or things that make sense to the company. And I really think that Amazon's done an amazing job at just continuing to grow and continuing to produce more. I think that Amazon is a very strong business. And I think that going forward, Amazon is going to continue to be worth more and more. I think that the long term investor really wins with this play. I think that I've been winning with the play and I took some profits, which is always smart. Again, over 10%, it's okay to take profits. Like, you're not necessarily being an idiot if you're taking a little bit of profits, because at a certain point, you have to have some targets to take some kind of profit, or you just buy it and never look at it again, which is a strategy as well. But for me, I really like Amazon, but I think that this price also is just too high for me right now. I have to be, very greedy when it does drop and have the discipline to buy, but it's not really looking good compared to where I've gotten in the past. And, I really do think that the stock is going to be worth more. But I also think that there are some expectations here, and I think that Amazon has to meet them. I think that it's very difficult to grow when you're the size that Amazon is, and I really do believe in them. I think that it's more likely that they're going to succeed because they are such a large company with such high talent levels and so many things that can just elevate them to the next level in terms of their cash flows. And it looks like automation is going to be going more smoothly, and soon we're going to see more Amazon fulfillment centers and things like that that are fully autonomous. Um, so I think that the future is very positive, looking for Amazon, but there are risks, and there are definitely a lot more risks within like a multi-trillion-dollar company like an Amazon versus like a Prologis or a Waste Management or a Vici. So it makes sense that when you gain a decent amount of value in something that's very risky, and you make a lot of money, you want to kind of preserve that money a little bit more. I feel like that's just my opinion on it. I want to have a little bit of profits taken out and put them into Waste Management, which is something that I did because I think I've only sold like a fourth of my Amazon shares. And I'm happy to do that because I'm also getting the high dividend from Waste Management, which is, I think, extremely sustainable and going to continue to grow. Talking about Waste Management, I think that this stock is being ridiculously undervalued for what it is. I think that the growth is going to continually just be there. I think it's very inflation proof. I think it's a very strong business, very resilient. I think that even in improved economic conditions, their financing is going to be easier. Their numbers are going to be better. They're still going to have that growth. It's just that Wall Street wants to get into the thing that's going to grow more now, which is why this is suddenly worth less as an asset because it's more defensive and it's more safe. It's not as risky in a time where people are willing to take more risk now because the outlook looks a little bit better. The technology is looking a little bit better, and you want to be in the next hot, cool stock. But the reality of it is, you should be in the stock that's undervalued. Clearly, low risk. It's going to make you a lot of money in the long term. Might not make you necessarily as much money potentially as choice B or C, but you're locking in a really good percentage historically. And the business is very strong. It's not going anywhere. And that's why I like waste management here so much because it's fallen so much. It's, for some reason fallen out of favor. And that's where I want to buy. That's where I want to be a buyer. I'm very good at kind of noticing that and being able to pick up on the assets that have fallen out of favor and buying them when they're cheap and then holding them for a very long period of time despite what the valuation says and continuing to buy them while they're cheap because I've done that with Salesforce a lot. I originally said I would just stay at 10,000, but it stayed low, so I've continued to just buy a little bit more of Salesforce here and there because I still believe it's undervalued. Same thing with waste management. I'm going to continue to buy that one, even though it's my lowest performing right now, other than Texas Roadhouse and Salesforce, just because I believe that long-term waste management is of extreme value, and you normally need a very high premium to get in. And this is the type of business that I really want my portfolio to have as a foundation. This is a business that I want a lot of money into. I want a lot riding on because, in my opinion, there's not as much risk in a waste management as you're going to find in an Amazon or an Apple. And because of that, I really think that not as many people are watching it right now. They're trying to exit it because it's not as fun. And I will take their shares because they're not patient. These are not patient people. They're chasing just the highest risk things they can. I will very happily buy their boring waste management stock that's going to continue to appreciate in value over time. And I will sell them, my Amazon stock that I believe has, appreciated a very high amount. I think it's near fair value, honestly. But I really think that waste management is well below its fair value for where I think it should be worth. And I'm very happy to pick up these shares. I mean, I've seen the estimated annual income just continue to increase and increase. And that's a really valuable number from waste management for me. Because I really see these companies like Waste Management that pay a very good dividend and are inflation proof and continue to grow. I see them as stocks that I actually want to own longer than some of these riskier stocks. They're the stocks that you don't necessarily need to ever sell in your lifetime. You could just collect the dividends forever, and the dividend's going to continue to grow at a very high rate. And the company, I think, is going to grow at a very high rate as well. I think they're on the verge of some really cool new technologies in terms of waste disposal. I think that they have economies of scale. I think that there's political stability there. I think that there's stability in terms of the cash flows for the long term. And I'm a very big believer in waste management. And I can say that right now. And we can look back at this video in a couple of years' time or whenever, and we can determine if I'm an idiot or not. If 220.50 was a good price to buy waste management on September 11th of 2025. I think that it is a good time. Again, I feel like I've said that too much in this video, but I'm just trying to illustrate it because to me it makes so much sense. But it seems like people are kind of missing this right now because there is so much going on. And I think that right now is a good opportunity if you're a long-term investor to build up, this kind of foundation with waste management if you want like a really solid, safe dividend. Because you don't know when you're going to get another opportunity like this. And this may be the lowest it's going to be for a while. May also go lower. Full disclosure, I don't know what the stock's going to do in the short term, but I'm pretty certain that I want that $100 dividend to increase more and more and more over time. and I want to continue to get into waste management at a very fair price that offers me a good annual yield and offers me what I think is a fair yield for the cash flow that it's generating. And I really think that we're there. I think that there's going to be continued growth in this sector. I think that there's going to be organic growth. I think there's going to be M&A growth. And I really think that the business is very safe and secure. Moving on to the next stock that I've added a little bit of too as well. We got Vici, ticker symbol Vici. I'm at about $8,087.70 worth of this stock, up $295.62, not including the dividends I've been paid. And I've been continuing to buy this because I really think that this one's also dipped a little bit too much. I think that the stocks that I like the most, which are the ones that have really low risk, just fundamentally, I just tend to like those stocks better just because you can hold them for a very long period of time and make a lot of money, and you're not really having to worry about a whole lot. Whereas with something like a Salesforce, you're not getting a very high dividend, and I kind of am bag holding, but it is ridiculously undervalued in my opinion. I think for the price to earnings ratio to hit 35 on something like Salesforce, that's just ridiculous. But with Vici, I really think that this stock is also just undervalued for the amount of yield that you're getting, for the properties that you're getting, for the cash flow that they're generating, for the fact that the contracts have inflation written into them so that they track with inflation, the fact that you're not having to add anything, do any maintenance, pay any tax on these properties. I think this is a great company. I think that with lower rates, we're going to see a lot higher cash flows being generated, a lot more efficiencies, and I really like the business overall. I think the business is thriving. I think they're going to be able to continue to buy more properties, make me more money, and I'm very happy to be a shareholder in Vici for the long term. Next up, again, we got Salesforce, ticker symbol CRM. I'm down $1,176.71 or 11.32%. I still like the business. I think the business is very undervalued fundamentally. I think that Wall Street has no idea what's going to happen with this AI stuff. I think that they try to have an idea, but you're not going to be able to replace Salesforce. You could try to do it. You could do your best to tell the employees in your company, hey, try to do this, try to do that, change this, make a Salesforce off of AI. Yeah, just go ahead and try that and see how it works. You're going to be left in the dust by your competition who's using Salesforce. I think that the agents are going to get rolled out. They're going to get more efficient. But I really also think that we're in the very, very early stages of this AI thing. And I really think that over the long term, it's going to exceed every expectation we have. But in the short term, it's probably not going to live up to a lot of our expectations. And the expectation that Salesforce and Adobe are over as businesses is ridiculous. I'm thinking about buying some Adobe too, since it's been hit so hard. Maybe that'd be a good stock to bag hold. But Salesforce obviously down an extreme amount. Still adding to it incrementally. I have a lot in, obviously. You can see 10,400. I've continued to buy in because I really believe that it's just fundamentally undervalued. And I'm going to continue to probably buy. I think that it's still undervalued here. I think you're getting a good price for it. And I think I could make a lot of money here. I think I just have to be smart about it and very patient and just continue to wait, because if they keep having record earnings quarters, they're going to be worth more as a stock eventually. I mean, it's very hard for bad things to happen to them if they're making all this money and they're buying back shares, they're doing the right things, paying off debt. I really like the business as a whole. I think that there's good network effects here. I think that they're integrated into a lot of systems. I think it's going to be very difficult to get out of Salesforce as an ecosystem. I think that they're a strong company. But I really like waste management more because I fundamentally just like the business model more. I feel like I can understand it a little bit better. I think it's a little bit more secure. It's not as much movement, which I like. And I already have a lot of exposure to Salesforce. So that's really the main reason why I'm adding more waste management as a percentage of money that I'm adding to stocks versus a Salesforce or a Vici or something like that. Hope you guys enjoyed these ramblings. I kind of just gave all my opinions on everything. I feel like I went over a lot of things just very quickly, but it's just kind of what I was thinking about. If you guys enjoyed it, please hit the like button. Please hit the subscribe button if you want to see more videos. Thank you for watching. Have a great rest of your day. Bye.